this is exactly when he said, if everything you thought to be true about the IUL turned out not to be true, when would you want to know? And it was just one of those things where I was like, well, of course, you know me, Don, like right now. And he's like, all right, well, I got some questions. I got some things I want you to contemplate and consider. And there's some people you should talk to. And he gave me the number of an actuary, and I went and I talked to the actuary. I took the actuary out to lunch, and I thought it was going to be like an hour conversation.
Okay, now stop. What is an actuary?
The actuaries are the people that design the policies, basically. They design.
All right, so you're saying that you had lunch with an actuary?
Yeah. And by the way, people in the industry, they basically put a firewall between the agents and the sales field.
That's exactly right. That's the point that I was trying to make. Most agents never in their entire career ever actually sit down with an actuary, which is somebody that actually talks about the risk and the real inside of the policy. And then on the other side, most agents never even talk to the actuary of the carrier that they sell. You can't even call them. In most companies, you can't even call the underwriters anymore because they don't want you having a relationship. That's okay. So continue.
Yeah. So I took him at, his name was Todd, right? So I take Todd out and thought it was going to be like an hour conversation. I was gonna bring up some concerns that, Don told me to express, and like I was going to get this really factual, like straightforward answer about what the IUL was all about, right? So one of the questions, and I don't remember exactly how he phrased it because I've talked about it in so many different ways in the past 12 years. But the bottom line, one of the questions was, all right, what is the main purpose of IUL? Why IUL over whole life? Like why would an insurance company want to do this? And he told me that it's a more profitable product for the company.
Stop.
Okay.
Stop. Cause you talk about it and you kind of just go over. We got listen. We got to sit and let it sizzle for a second. All right, we got to sit and let it sizzle, okay? You stated that you're sitting down with an actuary from the same company that you work with. And you asked, and when you asked them what was the purpose of the IUL, and he told you, he said the number one purpose of the IUL is what?
Well, he didn't say the number one purpose, but he did say it's a more profitable product than whole life.
It's a more okay. Now pause here. No, let's wait for a second. You said it's a more profitable product than a whole life product for whom?
For the company.
For the client or for the company?
For the insurance carrier. Right. So check this out though. So and think about that, and then I'll get to the next things. But like, if you think about that for a second, all the people that go, well, whole life is more expensive insurance. Maybe on the illustration, it looks like it's more expensive, but at the end of the day, the way they actually historically perform, it winds up not being cheap. IULs wind up being more expensive than whole life. Right. And I think it's important to know that. And to that point, if on every IUL illustration, they're, first of all, extremely complicated compared to a whole life insurance illustration. I think most people just kind of glaze over and numb out, and they don't read them and they don't even understand what they're buying. But secondly, when you get, there's a fees disclosure page where it talks about internal fees and charges. And if you look at it, it'll say, all right, cost of insurance fees, here they are. Admin charges, here they are. Insurance costs, here they are. Like they go through all the different fees depending on the company and how they have it laid out. And a lot of agents like to position that page as the fact that IULs are more transparent than whole life because whole life doesn't disclose all those fees. Well, I'm going to tell you that the reason whole life, and I learned this in this moment because I asked him this question. I'm like, wow, IUL is more transparent. He's like, yeah, but here's the deal. IUL has to be more transparent because IUL, those fees are all variable. So if you look in the top corner of the illustration, they're not giving you that page to show you the fees and how good they are and to be transparent with you. They're giving you that page to show you the little asterisk to tell you that those fees can get changed
at any time,
any point in time by the insurance company, and there's not a darn thing you can do about it. With a whole life product, they don't have to disclose those fees because they're locked in place. What you see is what you get. They can never be altered. Here's the deal. As soon, if you're thinking about buying a contract, a life insurance contract, you got a whole life option and an IUL option to choose from. As soon as you sign on the dotted line with a whole life policy, up until that time, you are trying like heck to qualify. It is a privilege to gain access to that contract because as soon as you sign on the dotted line, all of the power and control goes into the hands of the policyholder. All of the obligation, which is you, all of the obligation and the risk and the problems are put onto the insurance carrier. They have to meet all the guarantees, right? Period. And you become a business partner with them, sharing in the profit of the company with a participating mutually held company. Okay.
So let me explain this right here, because a lot of people talk about, well, you know, technically you don't get a dividend because a dividend is from the policies that are charged more. So you just take the extra profit from the policies overcharged. Okay, well, let's say we give you that. Well, how else would a company make profit? From charging more than the cost of to the public to do business, and the difference of that now gets paid to its what? Shareholders. So if I were to take the same exact example, and if I were to say, okay, say you're getting dividends paid to you from them overcharging from this product that they're charging too much. Okay, let's look at what products do you make the most money from? Term products, first of all. That's a cash roll for dividend paying whole life insurance product. Matter of fact, I love that the life insurance company sells term products because it's nothing but profit for us and the company. Number two, IULs. I love it. You know, to charge all you want because all the fees.
Product for the company.
Come on, because it's a profit for the company, therefore meaning it's a profit for you, the dividend mutual owner of your contract. So if anybody's out there telling y'all, yo, listen, the only reason it's not technically a dividend because you're only getting what you paid back. Okay, even if you were to think about it like that, well, how do shareholders make profits from the selling of a product with a traditional company? The company had to sell a product at an above rate cost than the cost of what it takes to make or to get that product, and the difference of that is considered a profit. When you take that profit, they share it with the mutually holding owners of that company.
For sure. Well, so now, I want to make one comment and then I got to come back to this because And I don't want to get into this deep, but when you sign on the dotted line with an IUL, you become beholden to the insurance company from every way, shape, and form. They are in control of everything, right? And so that's the difference between the two. Now, going back to what you just said, I think there's a lot there, right? So the definition of a dividend, this is one of the challenges that I have even with the whole life insurance industry. It's one of the challenges I have with people who misrepresent infinite banking or privatized banking. This is going to get fire right here. You're going to get fired up. I know you. By the way, have I told you my wife hears us talking, right? And this side note, everybody's going to find this funny. So she walks us and she's like, "Are you on the phone with like some preacher or something? Like that guy's going, he's spitting fire. Like, is he's on fire? Like, what are you guys talking about in there?" And I'm like, "We're talking about life insurance."
Life insurance.
I was talking about it. She's like, "I've never heard anybody that passionate in my life about it." So she nicknames you now. She calls you Preach.
Preach. Okay, I can take that. I'll take that.
So anyway, here's the deal. The thing that I can't stand about like some of the people misrepresenting infinite banking and the way dividends work and the whole positive arbitrage conversation with all these different things and making money buying depreciating assets through your life insurance policies and all these things. Here's the deal. Somebody asked like, well, you said, how the dividends work. This is the way I look at it. I think it's easiest to just simplify it and take a step backwards and say, listen, let's take all the noise out of it and just look at apples to apples. What are the features of this What are the features of this product? What are the attributes of your money you're looking for? And I believe that everybody needs to start by building their financial foundation with safe, liquid, accessible, guaranteed capital, right? That will build you an emergency fund, an opportunity fund, and give you more control of opportunity in your life. And I believe that if you can just slow down and be willing to not chase returns, but be able to try to focus on building a safe reserve account and capitalization fund, what that does, you have more capital. Access to capital is king in hard economies, right? We know that the market is cyclical. It's not linear. It doesn't just go up. So you're slowing down to go fast, because access to that capital is going to let you catapult and just shoot your results forward when the time is right. But here's the thing. Everybody tries to make it too complicated. So if I go, okay, if I believe in that fundamental principle, then the next question is, well, where am I going to keep that money? Right?
That's right. I
look for accounts that have the attributes that fit what I'm looking for, right? And it becomes a savings account, bonds, CDs. Where are you going to keep your money? That's liquid. And at the end of the day, when you look at a properly designed whole life insurance policy and you fund it the right way, if you can front load it, if you get the right blend of base and PWAs and all these things, and there's a million different ways to do it based on what your goals and objectives are, you will find there's not another asset in the world that will do it for you. And this is why I say IUL cannot be used with private banking, is because of the fact that IULs just don't give the guarantees. And so a lot of people go, oh, it sounds like you like whole life over IUL because of the guarantees. Well, yeah, you can't do it without the guarantees. Like,
yeah, and this,
I put my money in the bank account, but I'm going to put my money in my savings account, but there's a chance that next month or 3 years from now, when I have an emergency fund, that the bank's just going to not give me access to my money. Am I wrong?
Hey, this is the thing. Here's the piece about private banking that most people are missing, because the large majority of the insurance agents that are out here are just insurance agents. That's it. Like, they don't actually practice the concept. And then we're not even going to talk about Doug Andrews, okay? Because Doug Andrews is going through his you got a whole video about Doug Andrews and all the money that he has to pay for him lying about the IUL. It's just ridiculous.
So enemy number one for Doug.
So cousin Alonzo, if you just go do due diligence on Doug Andrew and the lost cases that he has and the bajillions of dollars that he has to pay back to all of his clients that he wronged by stating that the IUL was an alternative investment in vehicle and all this other crap, you would be.
Yeah, it's disgusting. Just go. Anybody who wants, don't do it. Or maybe while you're listening to this, open another tab. If you're thinking about Doug or you follow Doug, just Google Doug Andrew lawsuit, and listen, my video, and I did a video on him, and I know you say you're familiar with it. I've gotten a lot of, positive and negative feedback on that video, but here's the deal. Whether the class action suits, a lot of people are like, oh, that can be good or bad. Like, some people get sued over all these random things. Anybody can get stuck in a lawsuit, class action lawsuit. A, I would disagree with that statement. But B, if you go look at how many legal situations have been brought on Doug, and you just look at all of the different articles and situations, you come to your own conclusion. You know what I mean?
And like lawsuits happen in business, but you got to look at when something keeps happening to the same person for the same exact thing. You got to look at that. And let's Alonzo, I'm so thankful that you're in the chat, because you're bringing up good points, right?
Yeah.
So if we were to even we didn't want to make this an insurance call, y'all. We'll fix it next time. But if you were to even look at a LIRP, a life insurance retirement plan, the IUL congregation has made the LIRP seem like it was only made for an IUL. Mm-hmm. And a LIRP is a life insurance retirement plan. They just coined it as a marketing strategy to make it seem as though it was only made for the IUL.
Yeah. Well, here's the deal, dude. Listen to this. So, okay, now this is one of the things I wanted to cover today. So I'm glad that's a perfect transition. So I've been saying this. If you've been following my YouTube channel, I've been saying this for 7 years on YouTube. 7. Okay. The whole conversation around IULs being optimal strategies and distribution vehicles for retirement income, right? Which is a LIRP. That's what it's for. Is an extremely, extremely dangerous strategy. Now, I've been saying this forever. A lot of people agree with me, and a lot of the people that are IUL pro IUL have kind of called me an idiot for that. Now, here's the deal. They've changed the regulations on IULs literally 3 times over the past 7 years.